Well, the World Bank is spelling a gloomy outlook for the global economy. A report by the bank predicts weaker than expected growth of 2.6% this year with a slight uptick next year. I sat down with Ayhan Kose, director of the Development Economic Prospects Group at the World Bank, to discuss what's weighing heaviest on the global economy.
So the big issue is, of course, growth is slowing and risks are elevated. The growth slowdown started in 2018. Now we were expecting the slowdown to continue 2019. It ended up being, sharper than what we expected in January. Of course, there are multiple risks out there. One of them is escalation of trade tensions. Another one, possibility of financial stress because of elevated debt levels. And of course, the risks in vulnerable economies weighing on the global outlook.
And what are some of the trends that you're seeing in some of the strongest performing economies?
When you look around the world, surprisingly and somewhat disappointingly this time, we downgraded our growth forecast in all 6 regions we are following. Still, East Asia Pacific, South Asia, they deliver strong growth rates. In East Asia, growth is around 5.9, but it is the weakest growth rate since the Asian financial crisis the region is going to deliver. In South Asia, you have India still delivering strong growth, but then you have Latin America and Caribbean, Middle East, North Africa, you have, of course, Sub-Saharan Africa, delivering growth rates in per capita terms quite low. Not enough to basically get them to the level of the income levels of advanced economies. We expect these regions to deliver faster growth, but that growth is not there yet.
And you touched on a number of issues, including debt. Are there any issues that you're seeing perhaps in common with some of the worst performing economies?
I think the worst performing economies typically have issues in terms of business environments and in terms of governance, undertaking reforms, improving the fiscal positions, improving the basic investment climate so they can attract outside investment coming in. And of course, these are difficult reforms to deliver in a short time period, but policymakers need to be steady and pushing the the frontier.
And so as we know, the US, as you mentioned, the world's biggest economy, is in a trade standoff with China, now also a tariff dispute with Mexico, some concerns brewing in the EU over things like metals tariffs and airplanes. How do you see this trickling down to some of these other countries that may be perhaps damaged as collateral damage?
I think the collateral damage term is correct in the sense that trade tensions have widespread effects, in the sense that first order effect, the reduction in trade and increase in cost of imported goods will have an impact on demand. But there is a second order effect, which is more important than the first order effect, through confidence. These types of tensions, when they escalate, have significant impact on confidence of businesses. They reduce investment, they reduce consumption, and this will translate into weaker growth, not just today, even in the long term.
Now, as we know, the G20 summit is coming up in Osaka, Japan. Any sort of expectations as to how important this meeting might be?
I think any G20 summit is quite important. World leaders coming together and think through the main challenges they are facing and setting out an agenda for the next year. This coming one is also quite important, and it could be materially more important than others. The important point here, basically, countries getting together, trying to solve their differences through negotiations.
And as you mentioned, there will be a slight uptick in 2020 of growth of 2.7%. What do you attribute that to, and what perhaps might throw that prediction off?
I think the biggest reason we think growth to pick up a little bit in some large emerging market economies, growth will come back. In advanced economies, we expect growth actually to slow next year relative to this year. The single most important issue is going to be related to trade. Of course, the possibility of financial stress, if we see an episode of flight to safety, primarily because of the escalation of trade tensions, could affect some of these emerging market developed economies that are quite vulnerable to capital inflows.